In the short run, stocks are a voting machine. In the long run, they're a weighing machine. And this company's been hurting for a little bit. Once we're done, we're going to explain our numbers, but you still need them to implement that strategy. Amazon stock. Guys, Amazon is such a popular stock. It is one of the leading companies in the S&P and the NASDAQ, and this company's been hurting for a little bit. Now, here's the interesting part. Let's pull up Amazon on our software. In the last 5 years, it's only up 40%. You might sit there and say, hey, Paul, you're such a dick. It's only up 40%. It's like, yeah, but this is the company that everybody thought was going to grow 20% a year. And my point about this is it doesn't happen forever. Amazon has been a great growing company, but look how much it's down from its all-time high. All-time high of 188.65 back in July of 2021. It's currently at 109. It actually hit $81 just a few months ago. Just a few months ago, it hit $81. Wow. Nothing lasts forever, guys. That's why we are value investors. In the short run, stocks are a voting machine. In the long run, they're a weighing machine. Eventually, people care. Go look at companies like Intel, Cisco, all these companies that 25 years ago have not beaten their current, their all-time high back in 2000. Stocks are a weighing machine in the long run. What's fundamentally behind them will matter. Now, let's take a look at some things about Amazon that I find concerning. One, first off, good thing, not much debt. 1.13 trillion in market cap. Market cap is buying all the shares outstanding at the current market price. Enterprise value of 1.37. That's basically buying the company, all its shares, plus all its debt, net of cash. So there's not much debt there compared to the whole entire market cap. Here are things I hate. PE, 260. 5-year PE, 75. Guys, you should be paying this with an insanely high growth rate potential and an insanely high ROIC. Look at their ROIC over the last 5 years, 8.3%.
Jeez.
In their defense, though, Mo, they are a growing company. They are still investing, and I do believe that they are still investing in their business.
That's funny to see a $1 trillion company operating as like this small growth company
with $525 billion in revenue. I get it.
It's insane.
But what worries me more about this is, look at this gross margin.
Yeah.
They've got worse than car industry gross margin.
Bad.
Toyota, Honda, Ford, these guys have a higher gross margin every car they sell than Amazon does. And Amazon has AWS. AWS, I believe, in the last year has been the only profitable venture for Amazon. Doesn't mean it's going to continue to be that way, but there are issues with Amazon that kind of make me go, So Mo, what are some of the bull and bear cases for Amazon before I take a poop on it too bad?
So bull cases, 26 million customers ordered same-day delivery, increased 50% year over year.
Is that a bull case?
I did it on Saturday.
Is that a bull case?
I think it could go even higher.
Did you hear they're starting to offer people money to pick, they're offering people $10 to go pick up your own stuff.
Really?
You didn't hear that?
No.
Let me pull this up.
Is it to go to like one of their Amazon lockers or something? So we have an Amazon locker, well, by my house. I've never actually been to it, but.
So look at this. Amazon paying some customers $10 to pick up their purchase rather than have it delivered.
So I'll tell you something funny. I ordered some TV mounts this weekend, and I could have gone to Best Buy and got them, but Best Buy was $15 more per mount, and I would have had to go there. Amazon was going to have it to my house by 5 p.m., and they did. I actually had it by there by the way,
Best Buy will match any Amazon price.
Yeah, I'm not going to go negotiate. That's weird.
I wouldn't negotiate. It's just, hey, guys, it's on here. They go, okay, sounds good.
Really? And it was their product. It was.
You think I'm going to negotiate? You think I'm going to go to Best Buy to negotiate? No, it's not negotiation. You go, hey, I know you guys do price match. Yeah, we do price match. There you go.
Price match.
What was that?
I didn't know they do price match.
Yeah.
But I wasn't getting in my car anyway, so Amazon wins.
So to me, actually, the funny part is I prefer to buy electronics from Best Buy because I want to be able to go to the store and say.
Even a TV mount?
Not a TV mount, maybe.
I get the electronics thing, though.
Yeah, you're right. You're right. The TV mount. I was thinking TVs, not TV mount.
No, TVs, I would go price that. Match that. I can get it right away. I don't have to have it deal with shipping and all that. I'd do that.
Yeah. Okay.
Anyways, so what have they done with their CapEx?
So I actually view
this is important.
So if you view this company as a major bull case because of how much they invest, the CapEx has skyrocketed in the last 5 years. If you believe this whole story about they're investing in their infrastructure to save money for customers, all that stuff. That's why I get concerned, though, about a $10 discount. Because I look at it going, damn, they did all of this in order to make life easier for customers. They bought more and made more money, and it hasn't transitioned. But again, I've been wrong on Amazon for a long time because I kept saying, where's the cash flow? And it wasn't justifiable, but they still kept implementing and kept getting high rates of return in a way that we didn't see, because that's the issue with return on invested capital. It tends to be subdued on growing companies. So if you like Amazon as a growth story and investing in itself, you should love this part. But eventually, guys, it's at $525 billion in revenue. At some point, you got to start seeing it to the bottom line. Look at Walmart. Yeah. Walmart's gross margin. Amazon's is 13.5, Walmart's 24.1. And Walmart doesn't have AWS.
Right.
AWS, their cloud services are like an insanely high margin. I don't know the exact thing, but I got to guess it's 75 or 80% or more, maybe 90%. I don't know. But if you believe that their CapEx is going to make life easier for everybody and more money for them, you should love those numbers.
Yeah.
What else you got, Mo? Anything?
No, I mean, they have partnered with Southwest Airlines to provide AWS. So with all the problems that Southwest is having, maybe?
I think that's a good thing.
Yeah.
But for me, that's more of a
Southwest
take.
Pro.
Yeah,
I think it's a big risk on Amazon's part.
Well, I mean, not a big risk, but the whole point is they are the largest cloud provider.
Yeah.
Remember, guys, because they're the largest cloud provider, they also won't show the highest growth rates.
100%.
So you got to remember that. Don't penalize them because their growth rate goes from 1 billion% a year to 400 million% a year.
Yeah.
That's okay because they're already the largest provider.
Yeah.
So let's take a look at our 8 pillars on Amazon. Oh boy, I was not expecting that.
They bad? Oh, they bad.
Now, guys, remember, don't just not buy a company. Don't just avoid a company because it has 8 pillars are a screening process to tell a story. But for me, to justify this really high PE,
this is an ugly story.
I need a lot more than this.
Yeah.
Price to free cash flow the last 5 years, 200. PE, 75. So the free cash flow number is way worse than the earnings number. That sucks. All right, let's go see what analysts are saying. Maybe analysts have a better story. My guess is it's going to be, oh, wow, look at this.
They have a really nice story.
Yeah, $1.44 in profit this year per share, up to $6 in the next 5 years. Revenue, still growing like crazy, almost $900 billion in 5 years.
In 5 years.
So how many shares outstanding do they have, Mo?
Let's see. So currently they have 10.25 billion.
Okay, so analysts are expecting them to make $66 billion a year in profit in 2027. $66 billion. So today's market cap of 1.1 is essentially 15 times that number. That's 5 years from now. It's going to be hard to me. Now, let's look at the stock, because I do think stock analyzer tool will be very useful for a company like Amazon. I'm going to look at it from 20-year perspective, because apart from Armageddon, how does Amazon go away? And I don't really mean that. I just mean it's going to take something very catastrophic for Amazon to go away.
Yes.
Because enough people buy into the thing.
Yes.
Now remember, guys, Amazon back in 2000 hit a high of 113, fell all the way to 6. This is split adjusted, which would now be 30 cents. But who was sitting there dealing with it on the way down? But we want to remember, every investment's the present value of all future cash flow. Mo's going to do a 10-year analysis. I'm going to do a 20-year. Once we're done, we're going to explain our numbers, because Amazon's numbers don't reflect the true potential of the business in both of our opinions. But you still need them to implement that strategy of generating profit. When the gross margin is so low, that concerns me. That, because to me, it's one thing. It's like, hey, it's like Palantir, 78% gross margin. Every extra dollar they generate in revenue, 78 cents goes to paying overhead and taxes. That's phenomenal. But with Amazon, it's only 13.5% right now. That's got to greatly increase to stay competitive and generate money for its investors. All right, guys, so hang on tight while Mo does a 10-year and I do a 20-year analysis. All right, guys, so again, I did a 20-year analysis, Mo did 10. Revenue growth. I did 4, 7, and 10%. Mo, what did you do?
I did the same thing.
Okay.
This was a lot harder than I thought it was going to be.
So 10% a year for 20 years takes their revenue to $3.5 trillion. That's a lot. But think about where our companies were 20 years ago.
Yeah.
Okay, so, and as the world grows, the world expands, they're going to expand internationally, et cetera. Okay, at 4% growth a year for 20 years, it more than doubles. So they go to like $1.2 trillion in revenue. Still $1 trillion plus company. All right, profit margin.
I did 2.5, 4.5, and 6.5.
I don't disagree with you. I did 3, 4.5, and 6.
Okay.
And the funny part is, like, I don't know, the business in 20 years, if it's driven mostly by
Could be totally different.
goods,
Yeah.
this is probably going to be somewhat accurate, somewhere in here. If it's driven mostly by data, it's probably going to be much higher.
And that was my struggle there. I didn't, and for free cash flow margin, I didn't know what to do.
So just to let you guys know, Warren Buffett and Charlie Munger would immediately pass probably on Amazon saying, I can't reasonably assess what they're going to make in the next 20 years because they don't know where the business is going.
Yeah.
All right, free cash flow margin, what'd you do?
I did 2, 3, and 4.
I did 3, 4.5, and 6 again. I just kept the same.
So I almost went higher, but I was like, at 4%, that's double what they did the last decade. I don't know.
Yeah, but you got to think the growth, you got to think the CapEx has got to slow down. You got to think the margins have got to get better. That's why I kept it the same as my profit margin.
Yeah.
What'd you do for PE?
I did 16, 18, and 20.
Look at us being twinsies.
Oh, wow.
16, 18, and 20 for both. And what'd you do for desired return.
10, 12, and 14%.
See, I did 11,
a little higher. Good.
12 and a half, and 14, because I still think this needs to be justified. I still think this needs to happen. And I think Amazon's going to have a lot of issues along the way they have to deal with, and I want a little meat on my bone for that one. And at today's levels, I think 11% is great, because I think the next 20 years is not going to generate anywhere close to 11% overall for the market. So I hit the analyze button. The stock's currently at 110. Guys, here's how overpriced Amazon is.
Wow.
I've got 23 on the low, 72 on the high side, 43 in the middle.
Oh, our numbers are almost
What is yours, Mo?
I have about 17 to 21 on the low, 45 to 73 on the high, 30 to 45 in the middle.
And I updated my my watch list. I added the stock to at $50. Not because I'm going to buy it at 50. I want to start selling puts at lower prices, but I will reassess it then. So guys, again, everythingmoney.com, $7 for 7 days. You get everything here, plus the community of thousands of investors you can talk to about your investment ideas and not be alone in the world of investing. Guys, check it out, everythingmoney.com, $1 per day. Take care.